a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, Happy New Year and welcome to Exploring ETFs. I'm Neena Mishra and today we are talking about the top performing ETFs of 2021. Now, 2021 was another banner year for stocks. Um, Major indexes closed out 2021 with double-digit gains, and that was for the third consecutive year, and thanks mainly to ultra-accommodative monetary policies and a massive fiscal stimulus. The S&P 500 was up 27% in 2021 and posted 70 record highs during the year. It has more than doubled since the start of 2018, and that is its highest 3-year return since 1997 to 1999. That was just before the bursting of the internet bubble. Now, this year has started on a positive note today, and let's see how it goes during the year. Last year, energy, real estate, and technology were the best performing sector, and utilities and consumer staples were the worst performing sectors. Now, if we look at the three top performing ETFs, they are from very niche areas, very specialized areas. They are not very suitable for long term investing by buy and hold investing, but it makes sense to look at them because they have very interesting stories behind them. So let's take a look at those three top performing ETFs of 2021. So the first one I'm talking about is the shipping ETF, the bulk dry shipping ETF, which gained 244% in 2021. Now, we have heard about shipping disruptions at ports, and container shipping rates have surged, and that is mainly because of supply chain disruptions around the world caused by the pandemic. Now, the recent spread of the Omicron variant has also created more headaches for this industry, and particularly following some recent lockdowns against some important Chinese ports, and further outbreak will only add to port congestion and delays, and they have been tightening travel restrictions, quarantine requirements for sailors. So all that has created, more headaches for the shipping industry, and which is the reason why shipping rates have surged. Now, the dry bulk shipping industry, it's a very important part of the global commodity market, and this ETF provides exposure to dry bulk freight futures. It's a very small ETF in size, 64 million, and has a large expense ratio, about 3.5%, because of this specialized exposure. Now, if you want to learn more about this ETF, you can go to the code page on Zacks.com, read our research report, articles. In fact, I did a podcast with the person behind the ETF. You can listen to that podcast, and you can also go to the external home page, the ETF web page for this, the web page for this ETF by ETF MG, Breakwave Dry Bulk Shipping ETF, and learn more about this ETF. It provides pure play exposure to dry bulk shipping. And You can look at the fact sheet. There is a very interesting PowerPoint on the dry bulk market, how it works. So if you're interested, you can, look at this PowerPoint and learn more about this industry. Now, the second ETF I'm talking about is actually an ETN exchange traded note. It's a carbon ETN. Ticker symbol is GRM. Now, I have talked about the carbon market and carbon ETFs recently, just a few weeks back. So I will not be spending a lot of time on this ETF. But quickly, we know that the governments around the world are focused on moving towards the goal of net zero emissions by 2050. That is set by the Paris Agreement. And in the cap and trade system, a government sets the limit on overall emissions, which is tightened over time, and big polluters, big carbon emitters they need to buy these permits to stay under the regulatory limits. The European Union has the world's largest and most heavily developed cap and trading system, the carbon trading market. But carbon trading markets are developing all over the world, including in California here. Now, again, to learn more about the CTN, you can go to the code page on Zacks.com. You can look at the article and the video that I did recently and learn more. And you can also go to the external homepage of iPath, Barclays iPath, and learn more about this ETN. This is also pretty small, just 115 million in assets, and has an expense ratio of 75 basis points. Now, the third fund that I'm highlighting is also an ETN. It is the TIN ETN, and it is up more than 120% in 2021. Now, tin is the most expensive of major base metals, the industrial metals. This is used in soldering, which is used to connect computer chips to circuit boards. And we know that the demand for chips and demand for electronics such as laptops, smartphones, computers, everything surged during the pandemic. So that is why the demand for tin also surged. Tin is also used in plastics which are resistant to heat, and that is used in certain home building materials. So with the hot housing market and the builders were buying drain pipes and cladding, which required tin. So that is why the price of this metal surged. And on the other hand, supply disruptions were caused by the pandemic, particularly due to the spread of COVID in producers like Indonesia, Malaysia, and Myanmar, and resulting lockdowns and travel restrictions, which continue due to the spread of the Omicron variant. So all those supply disruptions and the surge in demand caused in the spike in the price of this metal. This ETN is very, very small. So if you are interested, you need to be very careful with this ETN. Has just 19 million in assets and has an expense ratio of 45 basis points. But again, if you want to learn more about this ETN, you can go to the code page on Zacks.com. You can learn more about you can read up our research articles, etc., and you can go to the external homepage. It is again a Barclays ETN, Barclays iPath ETN, and the ticker symbol is GJT. You can learn what it holds and how it has performed, etc. So these three are all very specialized but very interesting stories of 2021.
Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos, our video channel, so that you do not miss anything. And I will see you next week.